Welcome back to XRP Matrix. What if I told you the biggest mistake XRP holders made this week had nothing to do with XRP itself? Not the price drop, not the scary headlines, not even the flood of predictions calling for XRP to crash to 10 cents or explode to $27. Because while millions of investors were glued to fear-driven headlines, something much more important was happening quietly in the background, and almost nobody was talking about it. This week brought everything at once. Global conflict escalated. Stock markets swung wildly within hours. Crypto traders watched red candles spread across their screens. Social media exploded with panic. Some influencers claimed XRP was finished. Others promised life-changing gains were just days away. But here's the problem. Both sides were selling emotions, and when emotions take over, facts usually disappear. So in today's report, we're going to slow everything down and separate what actually happened from what people wanted you to believe happened. We're going to look at the headlines, the market reaction, the regulatory developments, the institutional activity, and the rumors that spread like wildfire across the crypto space. Because once you remove the noise, the real XRP story looks very different from the one most people saw this week. And by the end of this video, you may realize that XRP's so-called worst week wasn't really about XRP at all. Let's get into it. The first thing we need to address is the event that shook financial markets around the world. The renewed escalation involving Iran created an immediate wave of uncertainty across global markets. Investors rushed to evaluate risk. Stocks reacted, commodities reacted, crypto reacted, fear moved faster than facts, and within hours the financial world looked completely different. But here's what many people missed. This wasn't an XRP-specific event. It wasn't even a crypto-specific event. Nearly every major risk asset felt pressure at the same time. Stocks lost momentum. Gold became volatile, oil jumped, Bitcoin pulled back, altcoins weakened, and XRP moved lower alongside the broader market. That distinction matters more than most investors realize. When a single asset falls because of problems unique to that asset, that's one type of signal. When nearly every asset falls together because global uncertainty suddenly increases, that's a completely different signal. In other words, the market wasn't voting against XRP. The market was reacting to uncertainty. And uncertainty has always been one of the most powerful forces in finance. The interesting part is what didn't happen. Despite all the fear, despite the dramatic headlines, despite predictions of disaster, we never saw the kind of panic collapse that many analysts expected. The market shook, the market stumbled, but it didn't break. That tells us something important. Underneath all the fear, investors were still willing to hold positions. And that becomes even more interesting when we look at what was happening in Washington while everyone else was focused on the latest crisis headline. Because while social media argued about price targets, one of the most important regulatory developments for XRP continued moving quietly through the political system. Discussions surrounding crypto legislation and regulatory clarity remained active, and that matters because regulatory certainty has been one of the biggest missing pieces of the XRP story for years. For a long time, institutions have wanted clearer rules before committing larger amounts of capital to digital assets. That's not fear. That's simply how large financial organizations operate. They need structure. They need compliance. And above all, they need clarity. That's why developments surrounding crypto legislation continue attracting attention from major players across Wall Street. The loudest voices online treated every delay as proof that progress had stopped. But serious legislation rarely moves in a straight line. Real laws get debated, real laws get adjusted, real laws face scrutiny. And sometimes the fact that policymakers are arguing over details is actually evidence that something is being taken seriously rather than ignored. That's a completely different perspective from the panic-driven narrative dominating social media this week. And when you combine that with growing institutional interest in tokenization, digital assets, and blockchain infrastructure, the picture starts looking far more complex than the simple bullish versus bearish battle most investors were watching. Because while retail traders focused on today's candle, institutions continued focusing on the next decade, and that difference in time horizon may be one of the most important clues hiding inside XRP's worst week.